The markets are still sulking a bit. But Reema, I must come back to you on this IT thingy. I was very excited when I saw the Trump statement, but the top 4 losers today are Infosys, Wipro, HCL Tech and Tech Mahindra. So is it that the market is fearing that talent will run away from India, or why is the reading negative, or am I just overdoing it?
I think for now, it's still a lot more noise. We'll wait for things to settle down. But I think the street is a bit concerned about what Q3 earnings will unfold for the IT sector. But I just want to put on board a bull versus bear on the tech sector. So there is Goldman Sachs. Today they're saying that we're constructive on the IT sector going into calendar year 2025. So they're forecasting a 7% top-line growth for next year, which is better than the 4% in FY25 and better than the 1.5% in FY24, which basically means after 2 muted years, they're saying growth will accelerate. Now, this will be driven by pickup in the US economy, so that's 60% of your revenues. Sectors like BFSI, technology, consumer are all showing positive signs. There is positive commentary from the US banks. So whenever, Goldman Sachs has done their, financial services conferences, the commentary from the US banks, which are clients of IT companies, has been positive. Accenture numbers were strong. And even they conducted an IT spending survey. And the outlook for spending going into next year is positive. That said, in the near term, they're saying there could be revenue and margins pressures due to company-specific factors. So TCS's revenues, that's the first one to report their numbers, I think on 9th of January. There is a ramp down of the BSNL deal, so that will impact TCS. Wage hike or pass-through impact on LTI Mindtree. So in the near term, Q3, there could be some pressures, but they expect most of the pressures to be in the street numbers by mid-January 2025. Also, elevated valuations do cap the upside, and Europe is an area of concern. But still, Goldman Sachs is constructive going into calendar year 2025. Investec, on the other hand, says the risk-reward is unfavorable as they continue to see a potential for marginal downgrades when the numbers come out. IT stocks are trading at a premium to Nifty despite lower growth. Deal wins have weakened. The headwinds from AI is still far away, but for now they're worried about the valuations and deal wins. But in the entire IT pack, their preference lies for Zensar and KPIT technology.
That's really neat, the bull and the bear case for IT companies.